What is going on, traders? I hope you all are having a good day. Welcome to today's video. It is James Lee here from Celestian Capital. And today we're going to be dissecting this trade that I took on GCAD on January the 5th, which is the third trading day of the year. So, guys, I'm going to be dissecting this. I'm going to be doing an analysis for you guys so you guys can understand exactly why I entered this trade. And the great thing about this trade is that I have proof. All right. Watch the previous video titled New York Session Live Trading, and the date's on it as well, 1-5 2022. The date is on it, guys. I have proof. I show you my MetaTrader and exactly where I entered into the market. And I showed you the fact that my TPs were hit, or my TP was hit. So if that video is not enough proof for you, then I don't know what else to say. I don't know what else to do to prove to you that this trade was taken live. So without further ado, let's go ahead and hop into this trade. So first things first, if we go to a higher time frame, we see that there's this institutional candle, right? I have this institutional candle marked up, as you can see, and I'm expecting some kind of rejection from this institutional candle. As you can see, I in fact did get a rejection off of this institutional candle. Now, initially, I tried to catch the sell down, but price was consolidating so much that I got stopped out at break even. All right, so there was mitigation that happened here. Now we might get some more mitigation to continue to the downside to fill in potentially some imbalances or some to mitigate some demand zones. But all in all, we can expect price to continue going up. All right. So that's first things first. Higher time frame bias. As you guys saw in the directional bias video, I always follow the higher time frame. Be sure you're following the higher time frame so that you're not faked out of the market, faked out from one direction to another. All right, because the market is very manipulated. You don't want to get caught on the wrong side of the market. Now let's go down to a lower time frame and see where I actually got in. Even though I analyze on a higher time frame, I really analyze on the so my main analysis is done on the daily, and I usually use the 4 1 hour and 15 minute to refine my analysis, and I usually enter on the 5 minute. I don't try to go any lower than a 5 minute just because um, I think the 5 minute is the sweet spot for me for entry points. So, and based on my back testing, the 5 minute is best for me personally to enter into the market. So as you see here, we have price, right? Entered into our sell zone. I initially tried to catch the sell down. I think I got in on, where was it? So price broke down, go to 15. I believe I got in, where was it? Okay, so price broke down. I got in on the mitigation of this swing high right here. So I entered into the market right here, and then price started just, I don't know, it started doing some random stuff, and I got stopped out at break even. All right, so first things first, I showed you guys exactly where I try to get in for the sell. Now the buy is what's really important because that's where um this move came from. This the TP being hit came from, right? So I expected a sell down to this institutional candle. Why this institutional candle? Let's take a look. Because this institutional candle, if you look at structure, got a down move. We can see price creating some kind of structure for us, right? Creating some kind of structure for us. And then we see this is our last point of structure right here. So we've got this high to this low. So either price is going to, in between here, price is going to break this low, or price is going to break this high. Now, price breaks this high, then I'm more interested because the trend was already bullish, right? The trend was already bullish. So I'm more interested in price breaking the high than the low. Because if price breaks this low, then I'm not looking for any trades because I want to follow the trend. I want to make sure I'm following the higher time frame trend, the higher time frame direction. So price is bullish, price breaks through this high, and then there's this institutional candle left behind that price never mitigated in my eyes, right? Price never mitigated this for me. So we got this down move and then the up move into our sell zone. Try to catch the sell, got stopped out of break even. Price came back down here, right? So as you can see, we're right here now. So as we continue to follow structure, as we continue to follow price, we see some nice price movement, right? We see an up move, mitigation of this institutional candle, and we see price push up once again. Then we get a remitigation of, or excuse me, fill of some kind of imbalance over here, right? And I'm following structure. I'm following structure, looking for unmitigated demand zones that I could capitalize on and get in on. And then we see something happen over here, right? So we see price continuing to go up, price continuing to go up. And then I see this right here. I see, excuse me, wasn't that, it was this right here. I see price do what? Price liquidate the previous low. 15-minute looks a lot better. Price liquidates the previous low, right? Price liquidates the previous low, and then what? Price breaks structure to the upside. So we get this slight liquidation of the low, and then a break to the upside, breaking the structure high, right? So from there, I'm expecting price to come back and mitigate this swing low right here. You see this? So we got the liquidation, we got price creating structure, the liquidation of this low right here, and then a break of structure to the upside, leaving behind an unmitigated swing low. These three candles right here. So what do? I place my right here. Say we're right here. I place my entry point right here. I haven't gotten into the market yet. So after I saw this, see price break, I put my my line right here so that I know when to enter the market. From that point on, I'm looking for a mitigation of this, right? And then I finally get a mitigation at this point right here. That's where we entered into the market. And our stop goes right below the low. And then you give or take a few pips just for spread, right? And then my TP is targeted to this high right here, because I'm expecting price to liquidate that high, just because, you know, there's sellers holding on to their sales from up here to down here. There are potential sellers still holding on to their sales, so their stop losses are up here. And what do want to do? What do the banks want to do to these sellers? They want to liquidate them. They want to liquidate as many people as they can, going both ways. So we've got sellers still holding on to sales, thinking that price is going to go down here. Put this up here. And then what happens? We want to target that area as our take profit. So if we go down, we get tapped into the market, and then we get a slight rejection, and the price comes a little bit deeper to mitigate some more areas, right? And this trade took about, I'd say 2-3 hours, 3-4 hours actually, 3-4 hours it took for this trade to play out, just because the market's been pretty choppy lately. And then we see price start to reject off of our zone. Even though price was consolidating around here, these rejections were good signs of price not wanting to break this swing low. So this was looking good for me. And then once price broke this high right here, that's when I went to break even, because I didn't expect price to mitigate anymore. So at this point, we're still in the trade. We still haven't moved our stops to break even. And then we get this break above here. As you can see, it was broken above. What did we do? We moved our stops to break even. So now our entry point is somewhere around here. You want to make sure you account for commissions and spread. So what happens? Price comes down to mitigate some lower level demand zones, and then price pushes up from there, right? And we got a small rejection off of this candle as anticipated. We got a slight rejection. Go to 1 hour, it'd be a lot better. 15. We got a small rejection, as you can see, off of this candle. You know, probably induced some sellers into the market, but ultimately, this was just a fake out to liquidate those sellers out that held on to their sells, right? As you can see, stop loss is up here. And then take profit gets hit, guys. This was the entirety of the trade. I like to simplify my trading. I like to make sure my trading is simple because I don't like to overcomplicate things, right? Trading is, stressful as it is already. You don't want to make things harder on yourself. You want to make sure you simplify everything for yourself and cater everything to your understanding, right? So that's the entirety of the trade. Again, I have proof that I actually took this trade. If you watch the last video titled New York Session Live Trading with the date on it, you guys will see that I actually took this trade. Take profit was hit and made some good money. So yeah, that's the entirety of the trade. If you have any questions, be sure to leave them down in the description or down in the comment section below. And yeah, be sure to stay tuned because next week, guys, next week, which is fifth, sixth, I think it's the 9th or 10th or something, I will be starting my FTMO challenge on Monday. The Monday from today's Wednesday, on Monday, which is I think the 9th or 8th, I will be starting my FTMO challenge, guys. You guys are going to see me from start to finish. I'm going to document every single trade every single day, guys. Every single day, I'm going to document what I do and how I stay patient, my patience, and just overall what I do, whether I'm recording or whether I'm not recording. All right. So you guys are going to see me live in action, live in effect. So stay tuned for that, guys. If you want to stay tuned for that, be sure you subscribe. And yeah, peace out. Make sure you all stay safe. And I wish you a happy trading year. Peace.